Hi, and welcome to the review of round 2 results and some hints for round 3. So I'm going to go on the charts page into industry charts. You can see here now we have round 1 and round 2. So you can see for this first chart is the net profits per team, and you can see how the net profits for most companies have gone up. There's only a few companies that have lower net profits, which shouldn't be when you have an industry that's growing at 20 to 30% per year and the ability to lower costs through operational investments. You should always see a continuous rise in net profits. We have some teams here over 70 million. We have two teams here, AutoZip and Squeaky Clean Cars, over 70 million, and one team over 80 million. And this is the example team I use where I fully transparently disclose all the entries I make on that company so you can kind of get an idea of how to move forward. And I'll be doing that one last time for round 3, and then after round 3 I'm going to deactivate this company and you're going to have to make these decisions all on your own. But by 3 rounds you should have it pretty well understood what to do. Now if you look at the points per team, we'll see that round 1, as described in the bulletin board discussion board question some students have asked, is there an average number of points? No, every round is different depending on where you are in the competition. But the first round, it's very easy to make over 600 points, which most teams did, because you're competing against a failed management company that was fired after year 0 that had horrible results. And since your results are year-over-year comparisons, round 1 is the easiest round to make points in. Now round 2 becomes more challenging because you are competing against yourself and as well as all the other companies which are live human players in our industry. Now, most teams are able to make over 400 points, which is the goal. I would say the goal for each round. If you're making more than 400 points a round, you're doing very well and on track to get the full points for the assignment. We had a couple of teams that lost points. So, and you'll see that some of these teams here are the teams that didn't do very well in points, were also the teams that disappointed in profits. So that's why profits are very important to translating into many points. So increasing profits, increasing profit margins usually transitions into more points earned in various financial ratios. So don't despair though. If you lost some points or didn't do as well in round 2, it's easy to earn those points back in round 3 because you're competing off your year-over-year change. So if your last year was poor, it's easier to do better the next year. And the companies who did the best in points over 600 points may find it a little challenging to duplicate that next round. But by and large, I'm only looking for 2,500 points, which is really an average amount of points companies earn. Really like a C grade, 2,500 gets you the full points in the simulation. I have many teams that will surpass 3,000 points by the time the simulation is over. So I set the bar kind of low to get the full points in the simulation for the grade. Okay, so remember, moving forward, you're probably not going to see 1,000-point years anymore. You're going to see more like between 300 and 400 points, and that's sort of the goal because you want to end up at 2,500 at the end of the simulation. Now, stock prices are starting to fan out more. So this is, we all started at $5, and then we had a range between $17 and $10 last round. And this round, we have a range between $16 and $37. So as companies are making good financial decisions, buying back stock, making good increased movements in sales and earnings, we see that the stock price starts to change as investors are picking the best companies to invest their money in. Sales, we see that one team here, we had a huge skyrocketing in sales as they're able to. This team might not have been able to make decisions; they might have missed round 1, but or they just not interpreted how to do the forecasting correctly, and now they're back on target. So the biggest increase goes to this company, and you see that in their points. They did very well. We have a new leader in sales, Zerg, and we have RAK is last in sales. So they may want to look at their forecasting methods, check out my videos, and do a little bit more research in the practice games. And we had only one team that had a decrease in, which is very unusual to have a decrease in sales, since the market's growing between 20 and 30%, depending on the vehicles you're selling. You should always see an increase in sales. Earnings per share, we had a couple companies here decrease earnings per share as their sales or profits went down, but most companies did very well and increased earnings per share. Last semester's bottom company earnings per share now is elevated to the middle of earnings per share. And we had a big breakaway here, and you can see that my company is first in earnings per share, and you can see exactly how I did that by watching the previous video where I show you all my inputs on the company. And I make those videos to give you a better idea of how to move forward in the simulation. Okay, so that's just a quick overview of our industry. By and large, most companies, I would say, are doing very well overall. And you can look at this percentile rank. This doesn't give you a rank in our class. This gives you a rank overall, I think, of the past 5,000 different companies that play the simulation across the world. And many of the companies in the class are in the top 50 percentile, and some are in the top 3 and the top 90 percentile of the current round points. And as you go through this, you kind of get an idea of how well you did versus the world, as this percentile rank as well as your team rank in this industry. Now, as you go through I'm going to go into, this is the last year I'll be doing this, because I'm going to deactivate the company after this year. But I want to give you one more year where I'll show you how I would make decisions in the simulation to move forward. And the first thing I do is I go to overview, and I see here's my year 1 to year 2 results. And I was able to increase my revenues by 40%. I was able to have a better quick and debt ratio. That gave me some points. My profit margins went from 48 to 54%. I'm always shooting for 3 to 5% increases in my gross operational net. 3 to 5% percentage point increases. So here I went from 48 to 54. So actually 6% increase, 6 percentages increase on gross. And 4 on net, but this gives me high percentages as far as year over year change. Now, it's hard to do very well in total asset turnover and return on assets. I didn't do, particularly great because I'm buying a lot of assets. So I have to sacrifice some ratios, like my equity multiplier is down a little bit. My return on equity is down a little bit as I took on some additional debt, as I, invested heavily in assets in the company. I can't make, stellar points in every category. But as far as my book value went up, my forecasts were mostly improved. Here I'm trying not to lose points once I can become more accurate in my forecasts. And I did make 100% or more operational investment increases. So went from 20 to 40 million, and that gave me 100 points, and I had a surplus. So I ended up with 500 points with my cumulative at 13. So I'm only 1,200 away from the 2,500 I need for the simulation. So after I digest my overview, I can go to my assessment and start seeing my assessments, which is going to rank each category by score, percentile rank, and performance. And then I'm going to go into the charts. Particularly, I'm going to I want to see my team performance chart, and I want to see the very bottom, my forecasting. And I see that I'm pretty close on most cars, except for I could have sold another 120 vehicles on sedan. So I see that's always want to keep a close eye out on my forecasting. And then in the industry, I can check out other top competitors and see exactly what their inputs were and what their results were and where they stand. I could review my financials to see how they're shaping up, and then have a full set of financials here. And then back to my sales. So now I'm in year 3. Customers' expectations have increased. As they do, the customer expectations have gone up. And it looks like for the economy class, it didn't really increase my operational investments here. So as I try to make, a car that's better than the previous year, I might have a trouble really increasing my profit margin, because I would say, because I didn't really invest a lot in my operations. So what I can try and do is maybe I'm going to lower my specifics here a little bit, and just maybe forecast a little bit lower, just to try to get that GP up, gross profit up a little bit. And I'm not going to be too aggressive on my sales forecast because I didn't really create enough room in my operational cost reductions to simultaneously increase my features of the car as well as, my profit margin. Now remember, when you do your forecasting, you want to go to the student manual, and I've said this 1,000 times, and yet I still have some students who are making this mistake, just have not listened. So I'm in year 3, so I look at year 3 here, and I want to judge based on year 3 average estimates of forecasts what I think I could sell. So I'm going a little low on economy, but I might go higher on some of the other cars, depending on how I build them. So this is really the part where you're putting a little bit more strategy in. So if I come to the next car, sedan, I see that I did move up my operational investment significantly on the sedan, so I do have some more room to move up. Some warnings here have to be a certain level. So maybe I'll try to move up on these variables and see where I could get. Okay, so here I'm not really able to move up much. I'm going to increase my forecasts. So here I didn't really improve much. So I'm going to go back and say, where can I'm going to try to just lower some expectations here a little bit. Still trying to do better than the previous round to get that profit margin up at least somewhere between 4 to 6%. And here I'm going to go for like a 3% increase. So it just tells me I need to make some more operational investments to keep up, because the customer expectations are becoming a little bit more, becoming higher in this area. So if I go to the truck level, I can see I'm having also some issues here trying to increase my operational profit margins. And there's not too much I can do about it, so I'm going to have only a 1% increase. I'm going to take note more operational cost reductions are needed here as well. And as I go into the last car, and here again I'm coming down in my operation, so I have to kind of, where can I so of course I'm going to go to where it is just to get that up a little bit. So now I'm just a little bit higher. I hate to do it on this one because it's so important, but I wanted to get that at least 1 point higher. And maybe I'll pull back on my forecast a little bit since the car is really not that great. So you see this round's being a little bit more challenging for me to get a higher profit margin on my sales area as I move into my marketing. Now marketing, that range is going to increase too as far as the overall spending in the marketing area, which I'll show you in a second as I lock in my sales data, submit my sales data results. I see here that the expectation range, that there's higher spending now on advertising as the market is growing. So I have to increase my advertisements spending to reflect that the market's getting bigger and there's more money involved. And I'm going to do this off camera because it takes a long time, and I'll meet you back in production. Okay, I'm now in production, and I see that I'm going to be forecast. I don't need to buy a new production plant, so I'm not going to buy a production plant. So this is going to give me better capacity utilization on economy, which would help some of my return on assets, return on total asset turnover. But I'm going to have to really ramp up my spending here in my operational investments for the economy class car, because I had trouble really making those. Now, unfortunately, here I'm going to buy 2 factories to get to 5,000 on the sedan to meet my production. This is going to cost me a lot of money to do that. I'm also going to need to keep up with my operational investments here as well. And then, luckily here, I don't have to buy a production plant because I already had excess capacity from last round. And I'm going to move these up as well, spend a lot of money here. And then, again, luckily I don't have to buy. And keep in mind, I'm never having any excess or shortage vehicles. I'm always trying to produce exactly what is forecasted. I don't need to buy a production plant here, so I won't. That'd be a waste of money. But I am going to invest on the... Now you can see in the user guide, in the growth forecasts. Let's see if I can find that. Here, the growth forecast. Sedan is increasing, actually luxury is increasing the fastest, but sedan is the second fastest. So that's why I needed to buy more production plants so quickly for those. So let's go to submit the production data and then see what we have in the finance page. Okay. So I still have a nice surplus, which is good. So I'm going to actually go back to production, and maybe I'm going to spend a little bit more money on economy and sedan operational investments, because there I've been struggling to make higher profit margins. So I'm going to spend a little bit more money in that area, and it's going to lower my surplus. But I'm also going to buy back, I'm going to retire some debt, I'm going to retire some short-term, and I'm going to buy back some stock because I have some extra money. So this will help when I buy back stocks. It will help lower my outstanding shares, improve all my per share variables. And if I lower my debt short and long term, this will lower my interest rate and also lower my outstanding debts, will help my debt ratios. So I'll do better in those areas as well. So now that I have still $42 million surplus, I'm going to keep it there because I did some aggressive forecasts. And in case I don't sell all the cars I forecasted, I don't want to have an unexpected deficit, because I could easily, instead of making 100 points, I could lose 100 points. And that would be a total of 200 points less than I would have had because of losing 100 points if I have a deficit. So I'm going to complete this year 3, and now that is done. And this is the last round. I'll walk you through how I would complete a round, because by this point, training wheels are off, and you should know exactly how you're going to use your strategy to complete the simulation and move forward on your own. But I just want to give everybody a good, solid head start into earning their points and understanding the simulation. And I want to make sure everybody's going to be doing well with this, because it is a good percentage of your total grade. Okay, so that's it for my review of results for year 2 and my hints and suggestions for moving forward in year 3. So remember to keep a note in your calendar of when the next round is due, which is next week. You don't want to miss that round. And make sure that you finish your discussion board questions and your case studies by the end of the week. Thank you for your time, and I'll talk to you soon.